A lot of people don't know that debts that don't even show up on your credit report can affect your mortgage loan approval. Some of the things that we're going to talk about today are buy now, pay later accounts such as Klarna, Affirm, Qualified, things like that. There's a lot of them. But one of those, the biggest thing on those are that they don't show up on your credit report, but they do show up on your bank account. So even though they don't show up on your credit report, you may pay for them in 6 months, 12 months or so. The underwriter can still count those debts against your debt to income ratio. Reason why is that usually you've used that account for more than one thing. You maybe bought Christmas stuff off of it, or you booked a vacation using it to pay for it. There's no regular monthly statement that comes out on that account. So what you'd be required to do is to actually call those companies, try to figure out how much you owe, maybe even do a call with the credit bureau with the companies, and they tell us, that, hey, they have so many payments left on this, maybe 14 payments. You may only have 4 payments left on one of the things you bought, but on something else, it might have been a vacation, or you got your car fixed using one of those buy now, pay here later accounts. And that's over 12 months. If it's over 12 months or 10 months, the underwriter can actually count that into your debt to income ratio. So your loan officer, when we pre-qualify you, not so much pre-approve you, pre-qualify you, may have looked at just your credit report and didn't count that. But then we see that you have another $250 a month of these payments, then that has to go into your debt to income ratio, or you may just have to pay it off. So that's something you want to think about. If you have those accounts, let your loan officer or myself know up front so that we can kind of get an estimate and add that in there. The next thing that may not show up on your credit report, or it could be, is child support. If you have child support or alimony, that may not show up until we get your pay stub. Some people, it may not show up on their pay stub, but it may show up in your bank account, or something may trigger it on the credit report for them to ask. You may have had a collection before and you have child support. So if that kid is younger, well, if you're still paying it, doesn't matter how old the kid is. If you're still obligated to pay it and it's still coming out of your check, or you don't have documentation showing that the child support is ended, then that child support is deducted from your income, or basically added to your debt to income ratio. So someone who may have had made $6,000 a month and they only had $1,500 worth of debt, then you go through and you find out they have $1,000 worth of child support. That's probably reduced what they can afford by at least $50,000 right there. So that's something you definitely want to let your loan officer know. It is asked on the application, but a lot of people don't put it. So that's something you definitely want to let us know about. The other things are IRS or state tax liens. So you may owe the IRS. It doesn't show up on your credit report unless they've actually went to the point of putting a lien on it or garnishing your wages or things like that. It may not show up on your pay stubs. That's something you want to let us know. Like, hey, if we look at, because some things don't require your actual tax returns for some loan programs. A lot of down payment assistance programs and USDA will, so we would see it. But if you have a payment and it's of $250 a month to the IRS, and we don't have that on the credit report, that does have to be added to your debt to income ratio also. Or you could pay that account off, at closing, so that it wouldn't be counted against your debt to income ratio. But most of the time, if you had the cash to do that, you would have paid it up front. The other thing are personal loans. They could be small local personal loans. They could even be something from, you got a loan from your state, or you got a loan coming out, you got a loan from a family friend, but you signed some type of agreement and they registered it. Those things can also count against your debt to income ratio. And even people with businesses, they're like, oh, well, my business pays for this. You got a car loan with your business, or you leased or you bought a piece of equipment and you got a loan on that equipment for your business. Then you definitely have to show us in your tax returns that the business actually is paying for that, and maybe other documentation where you're paying for it out of your business account. So when you do that, you want to definitely, if you could do that on your EIN and not your social security number, and not have it show up on your report. Those are some questions, if you're a business owner and you're looking to purchase or refinance your house sooner or later, that you want to definitely ask that person that you're buying that equipment from. And other undisclosed installment agreements, such as buy here, pay here deals, or I'm buying a piece of land, from somebody personally. We may not see it. You may not think it's a big deal because they're owner financing it. But if we see it come out of your statements, or we see record from it, sometimes we can pull tax records and you see it and there's like, oh yeah, I got a loan on that piece of land. They're for sale by owner and they're financing it. It's $300 a month. Guess what? That land and the taxes that are owed on that land, we have to divide that and put that into your debt to income ratio. So any monthly obligations period that show up on your bank account. If it's steadily, and we look at 2 or 3 months bank statements, like, hey, this is always coming out, the underwriter's going to want to know what that is. A lot of people are like, well, it's not on my credit report. Why does it matter? Again, we see that you're paying it out monthly. It could be something, as far as, it doesn't have to be child support. It could be some other type of obligation. It could be, anything. So just, those are something you want to be prepared for. To explain, a lot of times you can write a letter of explanation. It's not that big a deal. But if it is child support, alimony, palimony, taxes, or anything like that, those are things we definitely have to add to it. Again, we are just analyzing your ability to repay. So any additional debts outside of what's on your credit report that are affecting your ability to repay, that is why we're asking about those things. So got any questions, or you want to get pre-approved, give me a call, 404-461-3172, or hit me up at reggieloans.com.